There's really only two ways to be successful in the stock market. One of those is to get share price growth, and the other is through dividends. Now, I love dividend paying companies. I really love dividend paying companies. I like the consistency of a dividend paying company. That means that they have consistent cash flow that they're able to share then with investors. I love the consistency of it. I love the dividend growth. I love watching the company do better and better and better, and that dividend continuing to grow year after year. I love seeing the cash flow get better and better in the companies that I'm investing in. And the dividend paying companies typically are the ones who are providing services that are valuable to customers, and they are growing their cash flow, thereby growing those dividends. And lastly, I really enjoy the camaraderie that a dividend paying company has with its shareholders. Because if they don't pay dividends, the shareholder really has no true connection with the company. When a company pays dividends, they are saying that, hey, the investor is a partner with us. We are out there, we're making money, and we're sharing that cash flow with our investors. There's a camaraderie there that I really enjoy from a dividend perspective. So I thought it would be helpful if I shared with you guys what my top 4 high yielding dividend stocks are. So let's take a look at those. Hey guys, Kevin Burgess back again with another video. I'm really excited about today's video because when I think about high yielding stocks, even as a retired guy, I don't typically have a ton of high yielding stocks. So if you are especially a younger investor, I would highly recommend that you consider not focusing completely on dividend yield. When a company has a high dividend yield, it typically means something is wrong. When I look for a company that has a high dividend yield, there are 5 things that I look for. I look for a solid balance sheet and good financial statements. Number 2, I look for good capital allocation decisions. Number 3, I look for valuation. What's the value of the company? What's its intrinsic value, and where is it trading at compared to its intrinsic value? Number 4, I look at the strategy of the company and look for the strength of that strategy. How are they going to win? What game are they playing, and how are they going to win? And then 5thly, I look at the management team, and they can have the best strategy in the world, but if they're not competent to carry that strategy out, then it's not a company I want to invest in. So I'm looking for a competent management team with a solid strategy that has good, solid, fundamental business behind it. So those are kind of hard to find. So I'm not going to share with you today just a bunch of high yielding stocks because I don't think that's helpful for me, and it's certainly not helpful for you. What I want to share with you today are my top 4 higher yielding dividend picks. These are the stocks that I invest my own money into, and I want to share those with you today. Now, before we get started, I measure the performance of my portfolio based on a total return. If you're not familiar with the term total return, it means that I not only look at what my dividend income is, what my dividend yield is, but I also look at share price appreciation, and I want both of those. I don't want one or the other. I want both. So the 4 stocks I'm going to share with you today, I believe not only have a higher dividend yield, but are planning to have higher share price appreciation in the future. So let's get started. The first stock on the list is Hess Midstream. This is a company that I talk about a lot on my live stream, and I also talk about it in the Discord. It's a company that's really based up in like Minnesota, North Dakota, South Dakota area. It was a spinoff of Hess Petroleum. Now, Hess Petroleum is being bought by Chevron, but this Hess Midstream company is not involved in that. Let's take a look at Simply Safe Dividends. They give it a 40, which is an unsafe dividend rating. Now, this dividend safety rating doesn't make a lot of sense to me because their balance sheet's strong. The only thing I can think of is that they are focused on one customer, which is Hess Petroleum, will soon be Chevron. and therefore having one customer puts the company at risk. But I tell you what, there's a lot of factors to consider, and I'm not going to do a deep dive in Hess on this. I want to be able to share these 4 picks with you. But if you're interested in a full deep dive video on Hess Midstream, give me a comment in the comments below this video, and I will put one of those together if you're interested in hearing more about it. But let's take a look at the dividend yield. It is 7.3%. From a dividend growth perspective, they grew their dividend by 9% in this past year and 12% per year over the last 5 years. So you can see that there's a really nice growth in the dividend. The company actually spun off in 2016. So this is the 2017 was their first full year. So they've been paying their dividend for 6 years, and they've been growing it for all 6 of those years. You can also see here that most of the time, I don't know that there's ever been a time they haven't, most of the time they grow it a little bit every quarter. So it just keeps growing just like a stair step. One other thing I would share with you from Tip Ranks is that the analysts that cover this, that's all analysts, the top analysts, consider it a $40 stock. It's trading right now at $36.60. They say it is a 9.29% upside. So not only are we getting a high yield, we're also getting the ability to grow that share price. And again, total return is key. So therefore, if I can get growth in share price as well as a nice dividend, that's what I'm looking for. And this stock, I have started invested in this in 2021, and it has not disappointed at all. I've been very pleased with this investment. Now, second on the list, and please don't throw rocks at me with this one, but the second one on my list is Verizon, ticker symbol VZ. I had gotten out of Verizon. I took a tax loss harvest, I think it was last year, and had not gotten back into Verizon. I have now begun to get back into Verizon. When it trades around 39, I am typically buying a few shares. So the dividend yield on Verizon is 6.55%, which is relatively high. Now, their dividend growth over the last 5 years has been 2%. I don't expect that to be any different. I think they're going to grow at a pretty slow pace, which is okay. I mean, if you're starting out at 6.5% or whatever that was, growing at a slow pace is not terrible. But it is important that it's growing, and it has grown consistently. You can see that they've paid dividends for 40 years and have grown their dividend for the last 17 years. Let's take a look at Tip Ranks. You can see here that the top analysts are projecting that Verizon would be a $46 stock in 1 year. That's basically a 13% upside. So if I can get a 6.5% dividend and a 13% upside, that's not a bad stock to be in. Now, whether we get that upside or not, I'm not really sure. I do believe that Verizon is undervalued, but I don't know when or if they will figure out how to capture that value for investors. But at the end of the day, 6.5% dividend with a growing dividend, I don't think I can pass that up from a yield perspective. So that is pick number 2 for me. Dividend yield pick number 3 is United Parcel Service, ticker symbol UPS. They have a dividend of 5.03%, dividend safety score of safe at 69. Now, their dividend growth over the last 5 years is 12%. However, it's important to point out that they only grew the dividend by 0.6% in January of 2024. So while they've got a history of growing their dividend pretty fast, I mean, look at the last 20 years, is it 10%? They've begun to slow down. They do have some strategy issues, and so we're going to have to let them kind of work through that. But at a 5% dividend, I think we can afford to let them have some time to work through those issues. And you notice here that UPS has paid a dividend for 55 years, and they've grown it for the last 14 years straight. Now, sneaking over to Tip Ranks, we'll see that the top analysts say this is roughly a $144 stock. It's trading around $130. That means that there is some upside from a share price perspective. So again, if we can get a 5% yield and some share price growth, that is a great investment. Now, my fourth dividend yield stock is U.S. Bancorp. U.S. Bancorp has a dividend yield of 4.63% and a dividend safety score, which is borderline safe, of 55. Now let's take a look at their dividend growth. The last 5 years has been 8%. However, back in June of 24, they grew their dividend by only 2%, so their dividend growth has slowed down a bit. They have an uninterrupted dividend streak of 14 years and a dividend growth streak of 13 years. Now let's take a quick look at tip ranks. We will see that the top analysts say this is a $46 stock. It's currently trading around 43, got a 6.85% upside. So, we're talking about a 5% yield roughly with a 7% upside. 12% is not bad in a year's time. So if you're looking for dividend yield, but you also want to grow your portfolio at the same time, those I believe are the top 4 picks. Those are the ones that I'm looking at for my portfolio. So these 4 picks are the top 4 dividend yield picks on my watch list. And I don't share these so that you will go out and buy them. I just share them with you because that's what I'm doing. These are the 4 top ones on my particular list. So I'm sharing all this with you today to give you ideas and inspire you on to be a good dividend growth investor. Now, my last video was on dividend growth picks. You don't want to miss the picks that I had, the stocks that I picked in that video. So I'm going to leave that video just right here. If you want to click on that and see what those picks were, that would be great. And I will catch you on the next one.